We are okay. Good morning, everyone. Welcome to the live stream. It is Algo Factory. It is the beginners free broadcast right here on YouTube. This is the opportunity for you guys to ask us questions. Check out what Algo Factory is all about and get a feel for what we do here. And if you are interested, look, I'm going to tell you right now. Look, there are very few exploits available for the average American. Algo Factory is one of them. We teach you how to develop algorithms that trade on your behalf. Go to algofactory.tech, sign up, become a member today, find out why this is one of the best, fastest growing communities for trading, not only how to trade, but trading that information and education and learning together organically through immersion. And with that being said, we have the professor at hand. Cowboy, good morning. How are you, man?
Good. Fresh off a holiday weekend, lots of honeydew checklists.
Oh, God, yeah, tell me about it.
Yeah, were you all over that this weekend too?
Yes, sir. Yes, sir. Absolutely.
Yeah, I gotta replace water filters and fix a screen door and all this stuff. Plus, we don't use chemical weed killer because we don't want our kid to like run through that and get glyphosate up in his little system. So you got to pull the weeds. So I got this really cool.
What's wrong with glyphosate?
Glyphosate's great stuff. You want to use it to you just drink it straight. Take some Roundup. I'm just kidding, people. That's a joke. Do not do that. Glyphosate's really bad. Causes cancer.
I'm just joking. It's that's that thing you put in that Monsanto Roundup.
Yeah. Yep. Yeah. So just spreading the link out here. Make sure our people over at the Rogue Discord see it. Come join us live.
Yeah, join Cowboy and V live.
I guess so. Yeah, but I took some time over the weekend to do a little bit of algorithm testing, and I had a good successful test on like a scalp. I exited. Well, let me bring up the screen before I start talking about where I exited and all that. And by the way, everybody, it's a brand new channel, so we do want to get some love from the algorithms. If you're on YouTube, go ahead and smash the that like button for us, will you? Face says good morning over on YouTube. And let's go to our private group over in Telegram, see if anybody's on there. Looks like we got Annie there. Annie is with us. Snap it along. Snap it, Annie. So we go to the thing here. Do a little share screen. So yeah, tested on Bitcoin overnight, and those who were in the live channel got to see it happen. I exited the trade not an hour and a half ago, something like that. I got a good 1-to-1 off of it. Let me expand the screen a little bit so people can see what it was. So this was just a forward testing trade, right? So basically where I'm in the middle of building an algorithm and I saw a scalp, and so I entered it last night here at about actually it's 19:10, so 7:10 p.m. It's actually the next candle over. Yeah, so that's what I did. I entered, and I actually had my algorithm told me to exit this morning. Gosh, it was about 28,000 right there on the dot. I know I got about a 1-to-1. So by the time I actually exited, my risk to reward ratio was about here, right, just a hair under 1-to-1. So basically, what happened was Bitcoin made a big move up over the weekend, and I had a very small short going on. And it just, Bitcoin is a nasty beast. It is known to flip around and go against shorts, and it'll go higher than you think. So as it was going up, and I already have taken all of my, all my metrics out of here, but as price was going up, basically there was a liquidity block that went up to about 27,000. So there was a block of liquidity that was sitting kind of the top of which sitting right around 27,000. And if my memory serves, actually it was 20. That was the low bound, and I think the higher bound was up to like 27.5 or something. My stop loss was above it, and so price kind of pushed through that liquidity. We used the kingfisher.io to see where that is, and what that means for you beginners is right at this area where I drew that box. I have a data aggregator called the kingfisher.io, and I use that to tell me where people's stop losses are. Now, this trade was a short trade, so I entered it right about, I think, here, and that means that I wanted price to go down. Okay, so just to make it really simple, I wanted the price to go down, but at the top of this blue box, right about here, somewhere like right here is where I had a stop loss. That means that if the price goes above the top of that blue box, that means I'm out of the trade and I've lost. And the target was a nice 3-to-1, so the target was down low. That means that if I put in like say $1,000, then I make 3,000 pulling out. So it looks something like this, okay, more or less. And of course everybody in the private group got to see it happen. So price eventually pushed through where all that liquidity was, where all those stop losses were. And this is where people had, like me, they bet for price to go down. But when price hit the area where this blue block is that I drew, that's where their trades got out. And by getting out of a trade where you want price to go down, by getting out of a short, the way to do that is it's a buy order. So at that point, it's technically you're buying out of the trade, which pushes price up. And so the people who have all the money can afford to push price around, and they push price into that area to make it go up. Now, a lot of people at this point, as they're seeing their trade losing, a common thing for people to do is they're going to move their stop loss. It's just a newbie mistake, okay? So like that's basically where I drew that line. Oh, you know what I haven't done yet? I haven't expanded this. Let me zoom in so people can see what the heck's going on. So, all right, so that should make things a little bit more clear. I'm also going to go to a higher time frame to make this more visible. And then I'll explain this concept from an easier to understand standpoint. I wanted to show the example that really happened, and then we'll go over it from an easier to understand kind of concept. All right, so this is the same everything that I just drew, but I made the screen bigger so everybody out there in YouTube land and on the Telegram can see it. And by the way, we got a couple of shout outs. I got Trev, Valley Girl, I got my boy Cool Cat. They're all over there in the private group saying good morning. And I'm sure some of them are over on YouTube. We got Truckface. That's it. Okay, Truckface said hello. So anyhow, so my trade lost right here, right? So it was a small trade. I was entering thinking that Bitcoin might do the elevator down thing. It actually caught support and headed back up. Bitcoin is known to go against people who go short. That's just one of its quirks. And part of the reason is that Bitcoin has a lot of moon boys. There's just a lot of people who think the price is going to go up by default, so they can take advantage of that energy. They being the market makers who actually have all the money, and cause price to head up, and of course break through all these liquidity areas. So the lesson here, though, is that what new traders tend to do is they tend to want to move their stop losses because they don't want to lose. So in this case, I want a price to go down. So if it goes past this area and above it, that means I'm out of the trade. A new trader might have gone like this. Oh, well, the liquidity is just a little bit higher. Oh, it's just a little bit higher. And they keep raising that stop loss, which means that instead of risking $1,000, now they're risking 1,200. Now they're risking 1,300. And they just keep going up and up and up. And before you know it, your trade isn't even a great trade anymore. Now you're risking 2,000 to make 1,500 or something. So moving your stop losses it's just not a good thing to do. And what I'm going to do is I'm going to re-demonstrate this, and I'm going to do it like we're talking about something that people can understand a little bit better. and that's going to be a spot trade, which is basically like you're buying Bitcoin straight up. So, but before we go there, this was my test trade. I threw it on last night, and I exited this morning right in front of everybody's eyes. I exited towards the top of this at a 1-to-1, which means that had I put, say, $1,000, I would have made about $1,000 and $1,020. So it's an algorithm that I'm testing for scalps. It's, in this case, where price has made a strong move and then it retraces a bit and then wants to make another strong move. But it's a scalp trade. So it's just a quick in and out. This one being overnight, it was a swing trade. So basically it was, let me see, 2, 4, 6, 8, 10, 12, 4. Yeah, so about 14 hours, about how long that trade was on. So just kind of made it on a relaxing Sunday night, and that's how that goes. I do have the original stop loss in play. So what that means is that the original target and stop loss are going to stay where they are, so that I can measure how it really would have played out if I'd walked away and not managed that trade. But in this case, the algorithm did kind of tell me like, okay, it's time to get out right here, possibly re-enter later. So I may go ahead and test that re-entry as well. So unless anybody has any questions, then I'm going to go ahead and talk about the mistake that people make of moving their stop loss. All right, so Gigi's in saying, good morning, another great day for learning and immersion. And this is a beginner class. I try to keep the concepts a little bit more simple. Just remember that trading is a very big subject, very broad, and it's deep. And so the only way to really learn trading is to kind of immerse yourself, meaning like you just got to dive in. There might be some terms that you don't understand, okay? And that's okay, because you'll learn those terms as you go. We do provide some basics over at the Algo Factory website. I'm going to put that link in the text. Let's see, Algo Factory. Let me actually do it this way. Do a little copy, do a little paste, do a little dance, make a little love. No, that is not what I wanted. I guess it didn't let me edit that, so let's just type it out. And we do basic classes over there. So what I mean by that is I have a whole series of videos on there, okay? And those videos are going to bring you through some of the basics. There are so many basics out there with trading that if I were to do a video showing all the basics, it would be like thousands of videos. But I do give some basics, how do candlesticks work, how to read a chart, things like that. And of course, just as it is with like this video, and ignore the 404 link, everybody, by the way. I posted the new link on there. As it is with this video, nothing we say is investment advice. Make sure you talk to your licensed investment advisor, because that is risky and you can lose money. So, that said, those videos will give you the basics. And then as you just kind of immerse yourself, you're going to learn the terms. You're going to, people are going to say this and you're going to wonder what that is. You might look it up, might be able to ask questions. We can answer those questions as you go. That's just how trading is. That, there's not really necessarily like some university you can go to and learn how to do the trading. And trading is basically something you have to want to go out and get. And that's kind of real. So we do the best we can to put you on the right path and to answer those questions. And that's what we do at Algo Factory. We also assess we also make sure that we talk about the psychological aspect of of trading, right? So we want to make sure that we have you understand there are three basic kind of super important parts to trading. There's the building of your trading plan itself, which is the algorithm. So don't let the word algorithm scare you. You are just going to build a trading plan. That's all. It's any plan that you follow where the conditions all meet up and you take a certain action. Technically, that is an algorithm. So I know that's a scary word to a lot of people. There's no need to know computer programming, right? So that's one aspect. The second aspect is knowing how to treat your trading like a business. Okay. So there are several aspects to that. But there's money management. So basically, how not to lose all your money. There is how to track all of your trading. There's even like journaling and stuff. I mean, that's actually not something I don't think I've covered. But there's a lot to that. And then the other aspect is the third aspect. It's like a three-legged table, which won't stand without one of those three. So none is technically more important than the other. This is trading psychology, the third one. And so if you don't have your trading psychology figured out, then one of the pitfalls is that people they get into trading, they figure out a way to trade, like they build a basic algorithm or a trading plan. They have some success, and so they continue with that, and then they have maybe a drawdown where their plan doesn't work anymore. Like maybe the market changed a little bit, some aspects of the market changed, and then they just like give up, and they lose a bunch of money, and they don't understand why. And then they lose confidence because they haven't done what it takes to build confidence in their trading plan. And that is trading psychology. And that's a whole course in and of itself. There's a million different kinds of bias. So I think today's course, or today's bit of beginner, is going to address some of that psychological aspect of trading. And that comes down to moving stop losses, right? And that is not usually a good idea. It can be a good idea, but we'll get into that. So let's say that you're trading and the price is going like this, right? And you decide to go long right where I just drew that line, and price is going to go up. Okay. So you go ahead and you enter. Let me go ahead and make this a little bit bigger. You go ahead and you enter right here. And you put your stop loss down here. You do the math, whatever your method of stop loss is. Might be like you're using average true range, which is a great way to do it. And then you have your take profit up here. Your algorithm says that you can take profit in this area, and that's the trade that you want, right? But that's what the plan is, except that doesn't happen. All of a sudden, okay, so remember the way that this green and blue box works, and I use blue instead of red because it's a psychological thing. As price approaches the top of the green box, if price can go through the top of that green box, then you have won your trade. That means that if you risked, in this case, if you risked $1,000, in this particular case, you make $2,000 if price goes above the top of the green box. However, if price goes down below the bottom of the blue box, then you lose $1,000, right? And I always use a stop loss. That's what the bottom of the blue box is. It's called a stop loss, because as the trade goes against you, especially in the Forex market, when you're always dealing with derivatives, you can lose an awful lot of money. So I have that stop loss in there to where, okay, I know if the trade goes against me, I'm out of here. I've only lost $1,000. But if I win, in this particular case, I've won $2,000. Okay, so that's called the risk to reward ratio. We're not going to get into that today. We'll get into that later. But what we are going to get into is why a stop loss needs to generally stay where it is. Now, if you have an algorithm that has rules that says you can move your stop loss, then that's a different story. But what'll happen is people will be excited and they'll get in, they'll make some money, and all of a sudden the trade goes against them. And then they sit in this trade for a while. They just kind of sit in it, and then it starts to really go against them, but they think it's going to go their way. They think if they hold on long enough, it's going to go their way, and it starts to go towards that stop loss. But what happens is people fear a loss. Now, this is where trading psychology comes in. If you've been trading, if you've tested your method, if you understand, and if you've back tested it, forward tested it, you already have, to a statistical degree of certainty, you already know what your chances of winning are. You've already put together and calculated what's called expectancy. Once you have that down, you know that every time you press a button on a trade, you're going to make $130 or $1,300, whatever it is, right? Now you might win some, you might lose some, but over time, if you risk $1,000, you're going to make $1,300, just a number I chose, right? So in this case, you pressed a button, and instead of making 2,000, price is headed down to where you're going to lose 1,000. And a lot of new people will go ahead and they're going to take this line, this bottom of this blue box right there where that stop loss is, and they're going to, you know what? It's going to recover, but maybe my stop loss was just a little too shallow. So I'm just going to move it a little bit. And they move it like this, right? They move that box down. Now, if they lose, it turns into a situation where they're risking more than $1,000. Now it's going to turn into like 1,200, right? Only to win 2,000, which is still good, right? But then price kind of heads down, like, oh, I know it's going to turn around though. It's going to turn around. So I'm just going to move it a little more. Just move it a little more. It'll turn around. I know it will. My algo is good. Whatever, right? I've been doing this for a month and it works. So famous last words. So then price heads down and you just keep getting deeper into lost territory. Before you know it, you've moved your stop loss so far down that now you're risking more than $2,000, and the most you're going to win is $2,000. And now you're in for it. Now you're just going to lose a lot of money. So that move 99.999% of the time is going to be the death knell. That right there it's psychologically devastating. Losses like this tend to really make people second guess themselves. This trading is stupid. A lot of things happen psychologically at that point. And the real deal is there's a form of discipline where, what's so funny?
Trev said, is that what happened to Caroline Ellison? She says she doesn't use them.
Yeah. In a way, that's in a big way. That is what happened, Trev. That's good. So, that's, I mean, you could say that and it would be true. But this is what happens. So a stop loss is there to keep you from going into further losing territory. And one of the ways to develop your trading psychology and your confidence in your method is to have a testing methodology, right? And Algo Factory does teach you that. So basically, you would go back through time, you would test it a certain amount of times, you develop it, the mathematics to know every time you press that button, the average amount of money you make is going to be this much, right? Now, sometimes you lose money, sometimes you make a lot more than that average amount, but in the end, every time you press that button, that's an average amount, and you develop a Pavlovian, association. Okay, so let me explain to you a personal story, right? So in crypto, I got in during the beginning of the bull market of 2017. And I had a good algo, but that algo was designed on the bull market of 2017. So basically, I was really good at finding something that was going to go up and then getting out of it around about the time it was not going to go up anymore. Okay, that was it. And I was very good at it, made some good money. And then that ended, and I was new to markets at that point, right? Relatively new. I mean, I'd traded some silver in early 2010s, and not, even then I was betting on fundamentals. But when I'm talking about technical trading, I was still new to the market in 2017. Feels, that was 6 years ago. Feels like an eternity. And so when the market changed, and I was unfamiliar with how crypto worked, crypto was brand new itself. Everybody thought it was going to go to the moon. The Chicago Mercantile Exchange is now trading it. It's going to go to $1 million, and I'm going to be, what did Ron White say? I'm going to be on a yacht with my new friends, right? Okay, so the market turned around, and everything was crashing, and the opposite of what I was used to became true. So I lost trade after trade. I was buying dips, and the dips kept dipping. And I developed a Pavlovian response to clicking the button, where every day before it was like, I can't lose, right? I mean, yeah, you lose every so often, but before it's like, hey, I'm just going to get in this trade and, I'll look at it'll take profit like later this afternoon and make another $1,000, whatever. Well, after that, it was the opposite. And I lost a fair amount of money. I mean, I kept, I kept good money and, in the whole game, but in the end, I could have had an awful lot more. And that was just my lesson, right? My lesson was, of course, that, the market changes and you got to learn how to, there were so many lessons. I mean, gosh, the entire lesson can be translated in going to algofactory.tech and signing up for a pittance of $50 a month so you can actually see the result of my test. You can go through those classes and just, see like all the things that I developed to understand how markets actually work, how to back test, how to go back and look at the history. Because if I'd understood that,
Yeah,
and
but
if I
why
knew the
back
history of
test when you could
cryptocurrency,
play League of Legends, man?
oh, Diablo 9.
Yeah, that's more important.
Yeah, it's way more important. But yeah, I did, as I kept losing trades, the Pavlovian response was click button, make money. And I kept clicking buttons. And for a period of time, that old Pavlovian to click button, make money was still there. But then I kept losing trades. And eventually it turned into click money, click button, lose money. And then I froze up for like several months. I couldn't trade anymore because every time it was click button, lose money. And so the back testing, developing an algorithm, calculating your expectancy, which means how much money do you expect to make on a trade if you enter, let's just say if you risk $1,000, on average you're going to make $1,580. You eventually develop this new Pavlovian response by every time you click a button, it's 1580. And then as you forward test, you learn that that's going to be maybe more like 1520 or whatever. And then you start, you just trade it out. And eventually you have an algorithm that just pays. And you don't mind walking away. You don't mind letting that stop loss stay where it is. Because if you just do that, okay, so you lost this trade, big whoop. There's like a million infinite trades coming on the way where you'll be able to make that back. And that on average, you're making 1520 every time you click that button if you put $1,000 in. So that's the lesson. That's the lesson. And it's a big lesson. And it's a hard lesson. And it's a lesson that newbies learn very expensively. So I guess we're pretty much at the end of the free version of this. I've got the link on the screen, the algofactory.tech. Gorilla, do you got anything that you want to add?
No, it was a great beginner sessions and a great open session. I want to thank all of you guys for listening in. And listen, here's the deal. Don't just sit there and let these sessions go by and be like, hey, you know what? Should I or should I not join? Look, $50. That is less than a coffee habit at Starbucks. And you could radically start empowering yourself in order to change your life. AlgoFactory.tech, we provide you the tools, the know-how, and the trades on how to do it. And with that being said, Cowboy, let's flip over to our member exclusive lab. And I love all of you guys that are listening free on YouTube. Join us there. Join us in the lab.